Welcome back to the channel of Truth, Trust, and Transparency. Today, I've got another deal review for you guys, and I'm actually extremely excited for this one. Why, may you ask? Well, it seems like yesterday's video has inspired all of you guys. I posted a video saying a deal for $550,000 in New South Wales. Ladies and gentlemen, this deal that I have that is live on market, so nobody take it, is $299,000 in New South Wales, live on the market in 2025. Can you believe it? And what I think of this deal is probably going to surprise you. I can't say too much more, but let's jump into it because I'm super keen to unpack this one. Alrighty. Let's get straight into it. This deal is located in Inverell. I think I'm saying that right. If I'm not, let me know because you guys usually do let me know in the comments. However, New South Wales 2360 price, typical price of $398,000. Prices have grown 3% in the last year, 10% in the last 3 years. 41% in the last 5 years, 65% in the last 10 years. 5 yield, lower earth. So I'm super keen and interesting. Let's have a look at the data in a little bit more detail. Okay, so 3-bedroom, typical price $390, 4-bedroom $520. So what's interesting about this is there's $130,000 difference between what 3 and 4 bedrooms sell for. Now, if you compare this to, say, yesterday's video, we did Dorrigo, also New South Wales, also it was about $650,000. But if you look at the risk score, capital growth and cash flow and all those sorts of things, they were real low. They were like in the 30s or 40s. This is actually pretty surprising. Cash flow, you're not going to get much better. Pretty low risk. Not bad considering the price range. Dwellings, 6,000 dwellings, 12,000 population. So already what we have there, and I'm talking out loud and I'm comparing it to yesterday's video. If you haven't seen yesterday's video, go back or I can pop it up in the comments. But go have a look at Dorrigo. Already 6,000 dwellings and a population of 12,000 is quite substantial. It's a quite substantial size, which is great. This tells me that there is potential for flood risk and we've got some infrastructure spend. So I'm liking the look of this already. Typicals are increasing, growth rate cycle. So what this is telling me is it has been a steady performer at around 3 to 4%. And then it obviously had the COVID boom and we're up at sort of 4% a year prior to that. So keep that in mind. Inverell as well, where this is located, it is quite, this is a New South Wales regional, classic New South Wales regional. We will go into where it is located next after we have a look at the data. But remember with regionals, you are often sacrificing some of that capital growth percentage for a greater yield. Portfolios are all about balance, all about costs, stuff like that. You know, you're obviously not going to be buying a house for $390,000, 10 minutes out of the city. So when we go out, we obviously get a better buy price. Maybe we get a little bit less capital growth, but we also get more yield. So you have to balance that in with what the strategy is for this particular property. I actually should start asking people because they send me the address and they ask for my thoughts, but they don't ask. I should probably ask what the strategy is for the portfolio. But some cool things. Annual sales volume is 160. So already 10 sales a month, which is good, and 300 properties coming up for rent. Erstat is quite low too. And about a third of 32% are rented to owner ratio. That is pretty typical because remember, low socioeconomic area, obviously a lot of people will rent in those areas because they don't have the money to be able to afford it, to be able to afford to buy. However, when I look at affordability, I'm only at 25 years to own. So for me, this is an extremely affordable area for the people to be able to afford and buy there, which is good, which means we do have some space to move in terms of the capital growth. This is where it gets interesting. Only 1 month worth of inventory, 1.3 months worth of inventory online. Good. Stock on market, 17 listings. Okay. Building approvals down. Inventories, it hasn't done too much, 1 to 1.3. Vacancy rate seems to be pretty standard over the last 5 years. So about 10 dwellings vacant out of 6,000 dwellings, there is about 10 that's vacant. So I like those numbers. Days on market has been quite consistent, and recently we're seeing a drop. Now, short term as well, we're seeing a drop. So that tells me that there's potentially a little bit of demand over the last 12 months for this particular suburb, which is cool. Inventory, it's not too much of an issue. And listings are decreasing. Stock on market's decreasing. Now, days on market, you'd look at 56 and you'd panic. But when you look at it long term, we're decreasing, which is great. Affordable. Okay. Immediately I compare that to something like Dorrigo, like we looked at, and I say this is not alarming. There's a couple of good green flags here. Now, I'm not going to get the capital growth of 7 to 10%. However, I'm able to enter the market for a lot less here. So let's have a look. For those of you that don't know where Inverell is, we are just in between sort of Coffs Harbour, Nambucca heads. Nambucca. We're sort of straddled between Tamworth, Gunnedah, Moree, Grafton, and just sort of south of, I know we have like Warwick and that up there. So we're in this regional hub, and if you're going to be buying in a regional hub, I would always say have a look at all the other regional hubs, make sure we do comparison, and we find, is this the best place to spend $300,000? Now, for me, I know that a lot of these markets have moved and are more expensive. Now, this is the deal. $299,000 on 670 square meters of land, 3-bed, 1 bath, 2 car. Let's have a look at it. Open plan, reverse cycle, aircon, external laundry with second toilet, old school. Currently under lease with tenants paying $350 a week. So already, if I'm buying it at $300, now this could be the real estate agent, but if I'm buying it at $350 a week, 6% yield. Not bad. Good size. Let's have a look inside. So, quite a classic style Australian home. Kitchen. That's a interesting island bench. I don't know if I've seen something like that before. This is it, what looks like today. I mean, look, it is quite old. It is quite dated, but looks like it does the job. Fridge in the middle of nowhere. That is looking out towards the front. So this one would be probably front lounge room. It doesn't look like it needs too much work. I'm not sure what that is there, but it doesn't look like it needs too much work. Potentially a paint inside. Back shed. Bathroom. Not too much to report. Very large bedroom. Second bedroom. Kids. So there's a family in here. And we don't have a floor plan, unfortunately. Let's just jump down onto the street to see if we can see any red flags on the street. Okay, so this is it here. The bloke that's mowing the lawns is in the driveway, so ready to go. There is a power pole, however, it's not in front of the house, so I don't foresee that as a huge issue. It does not. It's a nice, quiet, wide suburban street. Nothing too alarming here. Neighbours look tidy. This is from February 2024 as well. So nothing too bad there. Obviously, they don't like paying for concrete driveways. but I can't see too many issues and or alarms with it. When I jump into the mapping overlay, you need to be careful with Inverall as well. If you're listening to this and looking into it, because of just there is a little bit of flooding. So I definitely keep my eye on that. I've brought it up here, and as you can see, the river that runs through the middle of the town and the low point here. This is our subject property. We miss this conservation zone. I'm quite intrigued about the history of this and why it is just there. Maybe something to look into. However, it does not affect our property. There is also a back lane, which is great for access. We love dual lane access. Potentially people have put in a second dwelling there. Would have to confirm. Might be some development opportunity. There you go. Someone else has done a corner block. That could even be a duplex. There you go. Developing out in the sticks. Looks like it's serviced, quite flat. Misses the conservation, misses the flooding. No real other bushfire issues or anything like that. The planning and the zoning is all typical. So nothing really much there to note. What's really interesting too is that buying under 500 or up to 500 grand as well in the area, there's not many options, especially on the southern side of the river. And the southern side as well, as you would see, has a lot of this built up area, shops and clubs and all that kind of stuff. Like there is a fair bit going on in this sort of town. There you've got at the moment sort of 4 options. Let's have a look at them. We know from the map as well that this is in a flood zone. This is the property that we're looking at, 299. We've got something here for 445, so quite more expensive. And when we go back, we've got 430 and 425. So high level, looks very decent, reasonably priced, probably underquoted. What is also extremely interesting as well, if we look at the map of houses to rent, there's a apartment on top of a shop here, and then there is literally nothing on this southern side apart from something all the way literally on the outskirts of town. One thing I'd want to talk to the property managers about to see if it is desirable to live in this pocket and if there is demand, because you've got no competition, which is great. A few of the other ones, 430s, 380s, 450. So it seems reasonably priced for rent. If it's at 350, potentially, a renovation could get us a little bit more rent there. And this is the buy price. Let's have a look at sold houses up to, say, 500 in the last 12 months. If I look at what has sold in the last 12 months, 390, 350, 280, 350, 290. So cheap. 269. So cheap. If I'm going to summarize this particular property, look, would I personally buy it right now and where my portfolio is at? No. But that doesn't mean that you shouldn't. Who would this best be suited for? This is probably going to be suited to entry-level investors. It seems as if the data is not a red flag and turning me off. That particular house maybe needs a few $1,000s worth of work, nothing huge. But this could just be, and who it would probably suit, is someone that is looking for a long-term hold to test and get into the property market. This isn't a property and this isn't a market where I believe that you would buy in and see that 20, 40% growth. There's nothing indicating that you're going to get a short-term growth here. What is indicated by this market and the data, in my opinion, is there is going to be, it looks like it's going to be a long-term hold, safe, set and forget type property asset for the portfolio. You need to remember as well is that if you buy a $300,000 house and it does 5%, you make 15 grand. If you have a $600,000 house and it does 5%, you make 30 grand. So obviously, the higher the asset that you can get into, the more money you make when it goes up in value. But the entry point and the cost to get into is going to be different. How much you can borrow is also going to be different. So this particular property, this particular area, if you are, just starting out your portfolio and scrounging together a bit of money, well, I do some numbers on this and I say 300,000. If I can put down a 12% deposit, that's 36 grand. I might be able to get into this maybe $55,000, which is extremely cheap and easy to get into. That $600,000 property, it might be 80 to 100 grand, which I've covered in other videos. So this would be potentially ideal for an entry-level investor, either a lower income or that doesn't have much saved up but just wants to get into the market. I would also compare Inverell to the other regionals and see if there's those other deals for this price point. And then I would also compare the data to see if it's the best place to spend my 300 grand. It's not a red flag to me at the moment, and I can see it fitting a certain type of entry-level investor. I think it is also important to note is almost your trade-off with regional is that you won't get that capital city growth run. You still get growth, of course, and you'll have those runs, but you get a better yield. So you need to think about prioritizing some capital growth and some yield to balance your portfolio. If you're looking to buy in here and get a short-term equity release, it's probably not going to be there. As I said, you buy for 300 grand, it goes up 5% like it's been doing, and you make $15,000. So it's not huge money, but to someone that's only got 40 or 50 grand saved, this could definitely be an option. I'd also want to compare it with potentially townhouses closer in and around the city fringes. They are doing great numbers because obviously the affordability issue. You just need to weigh up the land component, the land value, and do almost a side-by-side comparison to see, how much land, what's the land cost and all that kind of stuff, because it'd potentially be similar to the price of land out here. But look, not a bad one, and appreciate you guys sending it in. Any questions or thoughts, let me know. And as always, I'll see you guys tomorrow.